Welcome to Mental Capital Investing. Thanks for joining us. This channel is all about showing you how to build trading and investing strategies from the ground up. Welcome to our first video in our technical indicator series. In this series, we're going to be looking at individual indicators. We're going to combine them and look at how they perform in an overall strategy. Each of these videos are going to be building on the one before it as we look at all the pieces of what makes a strategy work. And keep in mind, we're not financial professionals, and this is for entertainment purposes only. Cool. So,
cheers.
Cheers. So the indicator we're going to be looking at first is going to be called momentum structural analysis. So momentum structural analysis is an indicator developed by a guy named Michael Oliver, and his idea is that most of the time a stock price oscillates around its moving average. And so what he did was, instead of looking at the price relative to the moving average, you can look at the distance from a moving average, and it can give you some clues about what the stock is doing and how it might be behaving in the future. And with any kind of technical indicator, its value really comes in understanding how it can bend those probabilities in your favor when placing a trade or making an investment. And so I want to demonstrate a little bit here through a few different examples of how momentum structural analysis works and how you might build a basic kind of concept around a strategy and how to use it. So before we get started, the way it works, the way it's calculated, is you take the moving average of some set period. He generally recommends 36 periods. So that could be days, months, whatever your time frame is. And you take the moving average and you divide that moving average by the day's price. And that will give you a different line, which we're going to be looking at, which will show you the magnitude of the price movement around that moving average. So we can look at this chart here. All right.
I will switch it over.
Great. So, all right.
What are we looking at?
Example here is going to be Vale or Vale. I don't actually know how to pronounce it, but I do know it's Brazilian. So we've got a mining company here, but we're going to be looking at this indicator down below. Now you'll notice this is an oscillator, but it's not normalized. So an RSI is an oscillator that is normalized. You'll see it fluctuate between, or it has a 0 to 100 range, and you'll see it fluctuate between, I guess around the 50 point, and up at above 80 is generally considered overbought, and then oversold is generally below, 20. So this is not a normalized oscillator, and I think there's a benefit there, because you're going to see a lot more of the magnitude of moves relative to previous moves, in much more greater detail. But what it does is it centers around this one line, and that is essentially this moving average you see up in the chart here. And so what happens is, we'll just zoom out a second.
That's one, right? That's why it's one, is because it is the baseline.
Yes, exactly. So if you can see here where this is really close to that moving average, you can see that the actual distance is very small from that one line. Okay. And so what I can do here is you can actually map. So I'm going to go ahead and shrink that down a little bit. You can actually map the magnitude of moves relative to the moving average over time. And you can see here, so way back on this daily chart, you have a move that ended at this particular distance, and then it consolidated. As you can see, the momentum kind of slowed. It went back down to the one line, kind of crossed and played around there, consolidated for a while. And then it had another move that was essentially the same magnitude, even though the price movement was much greater or much larger at this stage in the stock's history. And so you can see that here, and you can get some idea of how basically strong that move is. And when you see it get into certain types of patterns, like support and resistance are really good ways to look at this. or trend lines less. They're a little less reliable, but support and resistance are a great way to think about it.
What about
We get
Bollinger
to another,
Bands?
yeah, and we can also, yeah, for sure, and we can also look at band.
I'm a fan of the Bollinger Bands. I just feel like Bollinger Bands are one of those things where it's a very easy indicator to understand because it measures that statistical variation and volatility swing in price, but it kind of checks price. So it allows you to look at a price and see how far away or close it is to a Bollinger Band, because typically I would say in a lot of cases I've seen Bollinger Bands hold fairly true to locking in a particular range of volatility. Yeah, sure, stock prices can puncture that volatility range,
Mhm.
but it almost always resets when it's done.
For sure, and actually, we'll have in a future video, we're going to go over how to actually put some bands on here to generate trading signals. So,
Okay.
so for this, so what you can see here pretty clearly, though, in terms of market structure around this indicator, you can see a pretty clear bottom developing at this point here. It repeats itself up in the future, and then again, and then it kind of takes off after a consolidation phase up in the price action here. And so by looking for these patterns, and we're only going to start with basic support and resistance for the purposes of this video, you can start to see where inflection points might be occurring based on what you're seeing in this indicator. And so we're going to move on to another example here. This is what Ligand Pharmaceuticals. So here I've drawn a few more lines on the chart. Just zoom, we'll just kind of zoom out here. Now you can see from the price action, we have a kind of an established resistance and support area on the momentum indicator. And you can see its support here, it breaks through, it becomes resistance, and it breaks back through. Now we have, again, it's hitting that same, roughly that same level. And in fact, it's consolidating while that momentum is improving. So what we want to see is, can it break out of that resistance level that we established back here? It sure does. And you can even see the price action has not necessarily reflected the magnitude of the move that could be happening in the future, but we know that it's broken out of this, what is essentially a long channel of momentum. And so once it breaks out, you can see, and had you placed a trade when it broke out, you'd actually been a great spot to have caught all of this move here. And then when we start getting into that peak, we can actually see how strong those peaks are and when they're actually losing steam. So for example, you can see at that top of the peak that the peak of the momentum actually happens not at the peak of the price, but at the peak of the first move. And then the next peak, where the price is actually the highest, we see a slightly lower reading on the indicator. And so that should be your first red flag to say, okay, maybe this trend doesn't have that much more steam. And then we have a little break of this line that happened. This is a pretty short-term line. There isn't a whole lot to establish itself on. So, it might be a more risky bet to say that it's going to be going down a lot here. But you can see there's a pretty clear line in the sand based on the structure of that momentum. And now, once it broke through that, it came back down. It's found its consolidation range. You can see that it's caught up to that moving average, and it's kind of stuck within that consolidation range for now. And so what I find, we've looked at daily charts for this indicator, and what I find, longer time frames, it's very good at giving you a sense of how powerful a move might be, or when there is a legitimate breakout in that momentum that can give you an edge on entering a longer term sustained trend. You can use it for shorter term trades, which I will show you an example of now. These are the micro futures here. Let me just click back off. Hopefully that fixes the chart there. Yep, there we go. So I'm just going to move back a few days so I can show you. Now, on the shorter time frame, you have to understand that price movement, especially in high volume markets like the S&P futures, can get pretty noisy. So you're not necessarily getting sustained trends, or you might have some pretty gnarly pullbacks. It can get pretty volatile. Sorry guys, my software is just a little bit slow. I'm streaming two cameras here, so I'm gonna find this day for you where I have some stuff marked up. But you can still use it. You can still find some patterns using this structural momentum to see where you might be able to find an edge and get those probabilities in your favor when you're placing a trade.
So I have a question. Have you ever
please.
found instances where you were surprised that the structural momentum didn't actually hold as true as you thought?
For sure. So mostly when I try to anticipate what it's doing, let me just zoom out here and just find this. When I try to anticipate what it's doing and also on this short-term time frame, that's when you get a lot of volatility essentially around news and things like that. And so you could potentially run into a what looks like a pattern, but it actually is just some news that's being digested, or some news comes out while you're doing this stuff, and all of a sudden, the pattern totally doesn't do what you expect it to do. And so, but that's one of the risks when you're day trading on such short time frames, that you have to be conscious of what that news can bring into the market, because it can definitely just chop you up if you're not careful.
But this isn't just a day trading strategy. This is a strategy you can use for pretty much anything, it seems.
Yeah, I prefer it for looking at longer term investments. Like I said, it's really good on the longer term time frames to understand how things are moving. I do think it works on the shorter term, but you can't use it alone, because it doesn't necessarily give you as clear signals as you would like. But here's an example of a fairly clear signal in my mind. So we're going to start right here. At the start of the day, we have that big volume spike that kind of sets that opening range, right? Now, we can see that we have a kind of a nice calm channel, nice upward channel for both the momentum and the price. And when that channel breaks, you can see we enter into that consolidation range, and we get our first little spike down here, and then we kind of go back up, and then this is where the pattern emerges. We get a bounce, or a retest, sorry, of that resistance level again. Now, there's a couple things I want to point out which make this an interesting little signal. We've hit sorry, I'm zooming in here, it's a little slow. We've hit that point again, but not only did we hit that point, we see a little bit of an increase in volume, and we see a nice looking candle here, a nice looking wick on an upward candle, and it looks like it could be a pretty decent bounce. And that's a green candle on a spike down of that momentum. So they're basically heading in opposite directions. And so that's just like, it's just another quality of the indicator that of any given signal that you can look for. But what happens right after that is we get a nice move up, and depending on your exit rules, you can close that out after you catch it. But this looks like a great little spot to enter. Now, you wouldn't enter on this candle exactly. You might choose to wait to see it, not go down or not beat this little bottom of the wick here. You could enter right after you see the momentum, and even after this candle, you're not looking too bad either, because you can see that it goes back and continues to go up. So let's see, actually, we draw a line, and if you're really conservative, you could even use this line right here to say, all right, I'm not entering until we beat that little short-term resistance. And so sure enough, you'd probably be getting it right about here, and you still have a nice little trade after that momentum establishes itself. So yeah, in short, you can use this indicator on any time frame. I find it really helpful. On the shorter time frames, it's choppier, so you've got to be careful with it. You want to use maybe some other indicators to help you get a sense of what's going on. And we're going to be using some other indicators with this one in the future to see how that might help you identify real signals versus false signals. So yeah, Jeff, do you have any questions on that one?
Just the ones I've already asked. I feel like it's a really good indicator. It's great for sort of analyzing whether or not something is following the moving average precisely, or it's kind of really, really volatile, or it can even help you like judge resistance levels and support levels, because I think that's one of the most complicated things when it comes to looking at an investment and trying to time the market for those really good value-based entries is we see the dips. We know the dips are happening. How do we know how significant those dips are? Well, you got to measure it against other dips. Well, how do you do that? This is a tool that helps you do that, because you're not specifically looking at price. You're looking at percentage movements away from the average. And that can help provide an even playing field for analyzing resistance and support levels. So on that specific area, I think it's an excellent tool, because when you look at support and resistance levels that get generated on any chart, it can be complicated. Try to determine, hey, is this a little bit higher? Is there really a divergence here between these price levels on the support and resistance? This will tell you that. It will definitely tell you that very clearly.
Absolutely.
So yeah, I love it. I think it's great. Cool. I can't wait to use it. So if our folks want to use this, the viewers want to use this, how do they go about snagging it?
So this indicator that I have right here is one that I've written myself in PineScript on TradingView. There is a public indicator called Momentum Structural Analysis that you can search for on TradingView, and you can use it if that's the platform that you use. I'm not familiar with other platforms. They may have it, they may not. But you can use it on TradingView, and they have a version of it. I think, I'm not sure who the author is, but all credit to him if you do use it. Now, this is my own personal one. We're going to get a little more complicated with it as we go forward in this series. You're going to see some cool tricks that I do with it. I may or may not make that code public depending on your interest level. So if you are interested, or if you have any questions about the indicator, go to the comments. Let us know what you think, and we'd be happy to answer those in future videos as we expand on the indicators that we can use in this overall strategy. So thank you guys so much for joining us. Like and subscribe to the video if you found the content helpful, and we'll see you in the next video in the series.
Yeah, keep in mind this is a series not just focusing on this particular strategy, but we'll be covering a ton of different strategies. Yeah. So please be sure to check out our different videos. They all kind of relate and build off of each other to create a nice cohesive picture, help you improve your investing game or trading game, depending on which sport you choose to engage in. Have a good night, everyone. Thank you for participating in our.
Cheers.